Okay, Conrad, we're live. Welcome, everybody, to Wall Street Reporter's Next Superstock, a live stream for January 29th, 2021. We're back with ESE Entertainment, ENTEF, over-the-counter, Conrad Vasella, the CEO. Conrad, welcome back.
Always great to be on, Jack.
Conrad, it's a very interesting timing right now because your stock it's been up. I think it was 40 cents when you introduced the story to our audience. It hit a high of $1.97 recently. Now it's kind of pulled back, the normal pullback to $1.25, hanging out here, waiting for that next catalyst. And what's interesting is that the esports video games is very hot right now. Like GameStop, this is the everybody's talking about. The GameStop is, I don't know, what is it, 400 today, 350, who knows? It's up 100x in a month. I think it's 100x in a month, right? Or weeks.
It's at about 350, and I'll tell you one thing: don't mess with the esports and gaming community.
That could be it, because this is a lot. I think a lot of that buying is coming from like the Discord, the whole
Oh yeah, there's huge crossover there, and it just shows you the power of the Gen Z demographic, and that's the exciting part about what we're doing. That's what we're tapping into. That's the future. That's the upside. That's the big blue sky. That's the group that we're going to be working with, right?
Yeah, it's interesting because I think we were talking about before on I think off the live show on the phone, and there's been like right now. I think the mainstream kind of is. I mean, look, video games, all this esports. It's obviously been around, but I think now kind of the mainstream media sort of is waking up. Like there's been articles saying that, hey, this is right now, esports is kind of like what music was, for the younger generation, when music was, I don't know, back for, in the 80s or the 60s, whatever it was. Yeah, that was, we'll talk about music, right? That was the common bond. Now it's video games.
Yeah, and it's happening right now. It's funny you mentioned that. I brought it up last time. We're talking to Sony Records, Columbia Records. It's happening right now, and the cross section, it's even bigger, Jack. They're crossing over into music. They're crossing over into all traditional entertainment. I mean, look at the guys at Wall Street Bets. Sorry. I mean, shout out to those guys. Shout out to that entire community. Let's fire it up. Let's get ESE rocking here, boys.
And I think what's the other thing they're saying that basically like what's happening now is just because, again, like everybody now, like, it's the culture wants interactive. They want interactive. They don't want to stand by and watch. It's just like, they're saying just like, people switched from regular, newspapers, regular media watching to social media where they're involved. Now the esports is really kind of taking the place of traditional sports, which is like, your old business.
Exactly. And that's the thing is it's all about community, right? And that's what people always forget about when you talk about esports and gaming. It's all about the community, being tapped into the community, because that's what they've created. The interaction happens via the community. And you see the stuff they're doing. I mean, even an NFL game I was watching a few weeks back did this huge thing with the Nickelodeon where they had all this slime live on the TV. They had in the end zones, they had their own broadcasters, their own streamers, and they brought millions of new followers to that game via that crowd, right? That Gen Z demographic. It just shows you the upside's absolutely insane.
No, it's a fascinating thing. I mean, so it's very interesting because there's really not a lot of pure play esports stocks right now, in the market, and so there's a couple things. So I think what with our program, like the next super stock program, we look for a couple things. We look for companies that are addressing that big multi-billion-dollar market opportunity. They have multiple catalysts and they're at an inflection point. And one of the things also is. Is the company part of a big theme? And I think so. So in terms of ESC, I look at it as you're hitting on all those things. You got the big theme, the esports thing, and this is the year I think where the it's been going mainstream, but really now I think this is we're kind of in that inflection point. I think the GameStop. I know GameStop is really not easy. I mean, it's video. It's GameStop is really old world. It's cartridges. I think they sell, or whatever it is they sell.
Well, but, no, they sell everything, and that's a little bit of a misconception too. They have a big subscription model, and I hope they build that out. They're really pushing the e-commerce side. I would love to be a part of their group and get a sponsorship for Kick from GameStop. So if you guys are listening, call me, man, anytime. I would love to be involved with them. I think they're doing some great things, and get the community involved even more. But in general, like you said, this is in my opinion, it put even more eyeballs onto it. This entire sector is absolutely gonna fly in 2021, and it's time to get involved. And you hit the nail on the head, Jack. With our group, it encompasses the entire ecosystem. I built it that way so that you're not missing out on media rights, digital media rights. You're not missing out on the gaming publishing side. You're not missing out on professional esports team. You're not missing out on streaming or the community. We really wanted to bring everything into the ecosystem. So if you invest in our group, you're invested in the whole ecosystem, not just one element. It's not just a team. As I mentioned, we have all these different pillars, and we've recently added sim racing to the bucket, as I mentioned.
So let's can you give, so for anybody that's new, can you give a snapshot of, all the esports verticals that, ESE is involved in?
Okay, so there's a technology aspect. So there's online tournament platform. There's 3D track scanning and sim racing technology, where we implement, tracks and new races into the game Assetto Corsa. As it pertains to media rights, we own and license media rights and digital media rights globally. We have distribution channels, so traditional linear TV as well as what we were discussing, more of the social media side. So Twitch, Facebook, YouTube, distribution on that side of things. And then we have our esports team, our professional esports team. So that encompasses all, gaming in the newest and best games, so that everyone's interacting and a part of that bigger picture ecosystem.
This is the Kick.
Correct. And, that gets you in the game with, League of Legends, Rocket League, FIFA. You're a part of all of those different games. And that's the important takeaway of today, is that with our group, you're not missing out on anything. You're a part of the entire ecosystem. And we're going to continue that via M&A and continue to bring on those valuable pieces so that investors aren't missing anything, and they're part of a bigger picture, like you said, $1 billion play, not just a one-off or isolated to just one element of the sector.
Okay. So I think, so actually there's, we've got an interesting question here that from the audience. Jack is asking, with EGLX at $7, will ESE take the same path? Now, I remember EGLX was start off as a, it was, what was it? It was under $1, right? I mean, it was,
yeah.
And not, not much. I mean, I don't think it's that much different from where they started, in other words, their starting point, and where kind of you're at right now. Like, what would you say is the contrast? What would you say is the difference between EGLX and ESE?
Yeah, I absolutely respect what EGLX has done to date. They've done a great job, but we don't compare ourselves to them. We want to be bigger than them. We think we have a bigger market. We do have a bigger market in Europe and Asia. And they've created a path. Like you said, they've went from 50 cents to $1.50. Now they're at $7. And I know they're looking at a NASDAQ uplisting. And I think we could do the exact same thing, but faster and more efficiently. And we've hit it with better timing. The timing's now. They started last year, burnt a lot of capital. We're doing it this year, and the timing is perfect.
Okay. And I think their business was built through, really a series of acquisitions. I mean, it was almost all acquisitions, right?
Yeah, and they consolidated. It's very similar business plan, but I just think
they're focused on the media side, right? You're focused on.
they hit a home run with Omnia Media, and that's fantastic. I think we need to focus on what we're doing. What we're doing is a consolidation play in a region where there's more fragmentation. We could move faster, we could acquire faster, and we don't have to make the mistakes. And the market's just hotter for this segment. I mean, look at, like you said, GameStop, all these new eyeballs on the story. We're going to get a lot of exposure, and we're going to move fast. I can't speak for anyone else, but I am extremely aggressive. I have a massive pipeline, and we're going really fast.
Okay, so Conrad, in terms of okay, so I want to kind of follow up on the acquisition you announced last month, which is whether it's an esports, or is an infrastructure company, about 12 million in sales. Give us, just for anybody to tell us what that is, and when is that deal expected to close?
Exactly. Yeah, we informed you guys about the LOI. Anticipated 12+ million of revenue will come on the books. But there's huge upside to that revenue for 2021. We anticipate for that to be closed very soon. I would just, keep an eye out for it. We're deep into due diligence and just finalizing some things. But we're really excited about that deal. You have to understand, this infrastructure allows us to scale that much faster. They bring an additional 100+ employees, into our ecosystem. It brings us into 3 new countries, so offices in 3 separate countries throughout Europe. It's just a huge boost to what we're doing, and it really allows us to scale because the baseline infrastructure is there to just take off like a rocket ship.
Okay. Let's see here. Okay, so Ken is making an interesting point. So the market loves acquisitions, and you're really in a good position to do that. I mean, the stock is up. You raise some cash. I mean, there's decent liquidity in the stock. So I think, and definitely, if you get with a couple of more acquisitions, as things kind of build momentum, I think the stocks can start moving up, and there's going to be more liquidity, and you can raise more. So it becomes a success cycle. So the question is, what do you have? What do you have in terms of the M&A pipeline right now?
Yeah, I mean, this gets me fired up. So we have over 100 million in revenue in our pipeline right now. So it doesn't take a genius to figure out what that equates to. These are deals that we're deep into due diligence on. They're in lawyers' hands. We're working on them diligently, day in, day out. I'm working 7 days a week, 24/7 to get these deals closed. But the pipeline is thick. There's 10+ groups that we're looking at right now. And as I mentioned, 100+ million in revenue sitting there waiting to be consolidated.
Okay, so this is a
game changer.
I'm sorry. So we're getting information today, which we have, we haven't gotten before. So you got 100 million plus in the pipeline, potential. I mean, I don't know which. It's a funnel basically. You're looking at 100 million. Am I right? Is you're looking at about 100 million revenues worth of acquisitions, and you expect to close a percentage of those.
Of course, yeah. I mean, we're referring to the pipeline that we have in place, but they're real. These deals are real. They're in due diligence. Will we close all of them? I don't know. I would like to, but the reality is, if they don't close, I'm replacing them with a new one. The pipeline is so thick that these deals are going to happen.
Okay, so I think. Let me ask you this, Conrad. So in terms of you have this. I'll call it a funnel. Let's pipeline funnel. But you have basically is the idea to have. I mean, that you want. In other words, if you have the 100 million potential deals of revenue that you could add into ESE, you're going to have right now 12+ with this deal that's expected to close in the next weeks. So do you think you could pick up 100? Do you think you could? I guess the question is, could ESE exit 2021 with 100 million run rate? Is that a possibility?
Absolutely, it's a possibility, and only time will tell. But that's the goal. Internally, that's what we want to do. we set this bar high all the time. I said it from day one. I'm not scared to say it. We want to be a $1 billion+ market cap company in 2021. And that's the goal. And how do you get there? Put on 100+ million of revenue. That's the goal.
I think actually if you get
It's gonna be a bit higher.
Yeah, if you get to 50, in other words, once you get a run rate of 50 million, it depends on how fast you get those
it's all just time. How long is it going to take, right? But in my opinion, it's inevitable. Whether it's 6, 12, 18, 24 months, it's happening. I'm going after it day in, day out. I'm not making excuses, right? We're executing.
I mean, I think if you get to, let's say, if the market kind of sees you at 35 million run rate, and then you get to 57, 60 million run rate within a few months, like that,
they'll see
then you will get. I really believe you would get a $1 billion market cap, because the market really loves esports, and as we see things happening, there's going to be a big multiples put on this, on this space. So interesting. Okay, so you got 100. Okay, so I guess my question is, there's a funnel of 100 million worth of revenues in the acquisition pipeline. Percentage, like, what would you say is the odds of you getting? What do you think you can get in the first quarter? Like, by April, the end of the first quarter, do you think you can do you think you could exit the first quarter with, let's say, 25 million or so in revenues, including the new?
Yeah, I can't give percentages, but what I could tell you is, like I said, we will close, that first acquisition in the first quarter. That's 12.5+ million. And our next ones are, our pipeline's based on 10+ million. And we have a bunch in the pipeline. So, to anticipate to say we could have 25 million in the first quarter, absolutely. If we close it fast enough, we could definitely do that.
Okay, so I think here's Jack's asking a good question. Do you have enough cash to close all the deals in the pipeline? Can you explain? I guess maybe you can explain how that's going to work, funding all this stuff.
No, that's a great question. We just recently raised some cash, but as you guys know, if you've been following, these interviews, I'm a big proponent of using shares. And using that as capital to go and acquire. Why? Because it's the best for shareholders. It keeps cash flow in the till for us, and most importantly, it shows skin in the game, and that the person getting acquired or the company getting acquired understands where we're going. They're gonna want to take shares if they know we're going to $1 billion market cap. They're not going to want cash. They're going to want to go up with us. So it's a mindset thing, and we're going to continue and stick to that mindset. That's why we have a tight structure, Jack. You look at the structure, it's a lot tighter than a lot of the other groups.
Yeah.
Let's look at people's structures.
The stock is very responsive. Yeah, I mean, the stock
very responsive, and the structure's tight. There's a reason for that. And when we acquire these groups, we're going to keep it tight. So it's going to be even more responsive. And that's the upside for the groups that are getting acquired.
Okay, I think also maybe to add a little bit to that is that I think, look, once the stock, it seems, again, the stock is responsive. I think once the momentum builds, you could easily, I mean, you raised a couple $1 million last month. I mean, the stock was 40 cents, right? It was started with nothing. And I think at this pace, I think it would be very. I don't think raising capital would be an issue, because you're not going to do 100 million all at once, right? You might 10 million do, and as you close each deal, I think the market, the value will increase. So all of a sudden, your currency is more. I don't think it's an issue, actually. I don't think it's an issue.
And we'll raise the money strategically with shareholders in mind, with the company in mind, but if the right deal's on the table and it's in line with the vision, the $1 billion vision, of course you go and raise the cash, and it won't be a problem, as you mentioned. We see groups raising cash all the time. That's available to us. It's just we always want to stay within our strategy and our big picture vision.
Okay. Okay, we got a couple of interesting questions coming in. Okay, so. This is very good. Is it difficult to find accretive M&A opportunities in such a new industry? Like how many deals are out there? You know, is there $1 billion worth of revenue? I mean, like actually, talk about that.
Yeah, so that's a fantastic question, and it's right in line with our pipeline. It's a lot more difficult than you think to have the pipeline that I have right now. Why? Because esports typically really struggle to break even, generate revenues, or even be profitable. Keep in mind, all the 10 groups that we're talking to right now are all break even or accretive and profitable. So it's a testament to our team. We have a fantastic M&A team that's working day and night, as I mentioned. You know, we just have great deals in the pipeline. That's the reality. And it is difficult, but we've done it.
Okay. I guess before, how many shares are outstanding right now, fully diluted?
About 48, I believe. Yeah.
Okay, so 48 million, I guess. And Bob was asking what is the maximum number of shares you'd be comfortable? I guess I'm not sure I guess the question is with these acquisitions. You know, that's kind of a, you know, if you have 100 million revenues, how much would it cost? You know, how many shares? I think the question is, Bob, tell me if I'm asking this correctly. How many shares would be outstanding when you get to 100 million in revenue? Does that sound right?
Oh, okay. Yeah.
Maybe that's the question.
You know, the target would be to be under 75 million shares outstanding.
Okay.
Because you have to factor in share price, you know, when we're doing the acquisitions, etc. So the goal is definitely under 100 million, but preferably around the 75 million mark.
Okay.
Which means, you know, we're doing a great job at that point.
Yeah. Okay. Yeah. Because I mean, it's hard. Again, it's hard to really give it that because the stock could be moving up. You know, this.
But that's what I'm. You can't. It's hard to quantify, put a metric on it because you don't know the share prices at that time.
But it's good. It's good that you have that number in mind, the 75 million. So if you have 75 million shares, you get 100 million revenues. That could be, you know, 10x, $12 a share. You know, approximately.
See where I'm going with it? Always in line with the big picture.
Okay. So
remember, guys, that's the focus. I'm hyper focused on that number, and everything's built around that. You know, there's a strategy to everything, and we're really focused on that.
Okay, so that would actually be a 10 bagger from where we are now. That would be roughly 10x.
That's the plan. That's the plan.
Okay. Shafin is asking, who are your two biggest competitors, if any? Is Fans Unite your competitor? Both are great.
You know, I don't really see us having a competitor. I don't like using that. I think we're on our own path. I think we could be the biggest group out of them all. I really respect what Fans Unite's doing as well. But they're more obviously on the gambling side, the iGaming betting side. So that's a little bit of a different business model. Yeah, but I just don't really see us, you know, I don't really see people as competitors. We're on our own path. Follow my story. You know, I just watched a great interview with Elon Musk, and he said, you know, they asked him, what other shares do you hold currently? And he said, one, Tesla. That's me. You know, that's what I want to do. I just want to focus on ESE. Let's get to $1 billion market cap.
Okay. Let's see. Okay, any other questions do we have today? Audience questions. Okay, so well, I think we've covered a lot of it. Yeah. So pretty much. So right now, to summarize, so the big growth. Okay, so your big initiatives for 21, the big kind of growth initiatives is the focus. What is M&A? M&A is kind of going to be the big. Is that the big theme for 21?
The theme is going to be consolidation and M&A, and just one after the other, synergistic groups. And they, like I said, it's a layer cake. They just fold on top of each other, and it just grows. And the organic growth also skyrockets. So it's just that it just layers on top of each other, and we just want to keep pushing to get to that goal.
Okay. So kind of let's kind of wrap up. I think we're going to catch up with you probably in the next I'm assuming within the next 2 weeks you're going to be back with some news. Hopefully, good news, right? So right now, but in the meanwhile, what what's what else can we what can we expect like in the first the first couple months of 21? Like what else? What are the milestones should investors look for right now?
Honestly, just follow the news. We've been super active since the beginning of the year. We just signed 2 more deals, an apparel deal with Sector 6. It's a huge group that works with the biggest guys in the industry, Cloud9, Ninjas and Pajamas, G2 Esports. These guys are massive. They have distribution with Walmart Marketplace. Like, these guys are big. They're going to really scale our e-commerce side. We just signed a 2-year, multi-year deal with NeoSurf, adding more revenues to the book for us and really stabilizing our sponsorship package with Kick. And more importantly, you're just going to see news constantly coming out. I got a backlog of news, exciting stuff. And obviously, then the cherry on top of the cake is when we start closing these M&As. You guys are going to be pleasantly surprised and happy that you're long on this deal. And, let's just get the community involved. You have a great following. Let's create that momentum, right? Let's get the community behind our story, and help me reach out to these guys. Get the word out. Tell GameStop I want a sponsorship. Tell Elon Musk I want to work with Tesla with their sim racing initiative. Let's get the conversation started.
Okay. So we got a question. Good question. He's asking, what is the biggest, what are the biggest risks you see? What keeps you up at night?
We've been through a lot this year, obviously with COVID and what's been going on globally. But we weathered the storm and we've actually improved significantly during that period. And we've shown that we're growing revenues throughout COVID. So quite frankly, nothing keeps me up at night more than just executing, just making sure. I'm an ultra competitive guy. I just want to go out there and execute. I'm very positive. I don't see, external X factors I can't control. I'm only going to control the stuff that I can. And that's grinding 24/7, 7 days a week to get these deals done.
Okay. Conrad, let's wrap up. Question we asked you, we've asked every CEO that comes on the show. Maybe the answer changes from time to time. But what is so in your opinion right now, based on end of January 21, your opinion, top 3 reasons why investors should consider ESE stock today?
We'll keep it consistent. Multi-billion-dollar generational opportunity to get in on the ground floor. It's happening right now. The time is now. You need to get involved. And 3, you heard it today. The consolidation pipeline is in place. The deals are in place. It's just time to execute. So get involved now. Get the community behind it. And let's just run with it.
Excellent. Conrad, on that note, I want to thank you. Thank you, everybody, for joining today's live stream. And we'll see you on the next one.